Thank you so much, everyone, for joining us today on a rather gloomy, London day. But yes, so we are going to talk about financial crime and cybersecurity and how banks and fintechs can work together to make the challenges of the digital era. So I have a stellar panel joining me today, and I'll also encourage you guys to please submit in your questions. We are slightly short on time, but we'll try our best to take it. So should we do very quick intros? I am Rashee Pandey. I'm Associate Director of Membership and Growth at Finovate Finance. We are the industry body for fintech in the UK. And to my panelists, if you can do quick intros and perhaps also tell about how your work relates to financial crime in some way, that would be great.
Good morning. Thank you, Rashmi. My name is Jay Wilson. I'm a partner at Albion VC. We're a UK-focused venture capital firm. We manage £1 billion of capital, and I lead fintech investing. In financial crime, RegTech specifically, we've been investing in the space for over 10 years. Back in 2016, we invested in Quantexa, contextualizing transaction monitoring. We invested in Elliptic, doing the same thing in digital assets. More recently, a spin-out of Cambridge University and Regulatory Genome, which is bringing machine-readable regulatory text to market. So a broad application of this topic in the space, but I'm an investor by trade, so I'll bring that lens to the panel today.
Thank you.
Good morning, everyone. My name is Augustus, and I've been specializing in the MLKVC space for the last 10 years, progressing through various leadership positions as well as various financial institutions. And my career has taught me one thing, that in order to effectively bridge the gap between strict regulatory requirements and effective, fast business operations, you need to use technology in a smart way. So this mindset brought me to Saldo Bank, which is a digital neobank operating in the Nordics and the Baltic countries. And my task in the bank is not only to lead the MLCTF compliance program, but also to ensure tech-first approach, which helps our business operations run smoothly, however, never compromising on risk.
Great, thank you.
So good morning, everyone. My name is Bertrand. I'm the General Manager of OP Europe, as well as the Chief Revenue Officer of OP Group. I mean, OP is a company that is building a network of digital identity across the world. You might know that I would say digital identity across the world are very siloed, mainly provided by governments. The whole idea with OP is clearly to provide, I would say, this network of digital identity so that you can consume them in an easy and safe manner. So that's it.
Perfect. Thank you so much, guys. So we are obviously going to touch on partnerships, AI in practice, regulation, what's coming up. But my first question goes to you, Jay, because you spoke about investment. So from an investment perspective, where are you seeing partnerships between banks and fintechs and big tech actually moving the needle on fraud or financial crime?
Yeah, look, I mean, it's an expansive question. The development in financial services and financial institution partnerships more broadly has developed rapidly in the last 5, maybe 10 years. I mean, when I first really started investing at the grassroots stage, it would be 18 months, 24 months to even bring a POC into a large financial institution, and we've had significant developments now. Mostly now, I think financial institutions, particularly banks and fintechs, understand how to work together more than anything. They understand the key assets that each type of institution brings to the problem. Obviously, incumbent institutions bring balance sheet, bring heritage around managing compliance. The insurgent companies, they bring data science capabilities, they bring agility, they bring talent that is often starved in these organizations, and they're learning how to bring these two sets of assets together. And actually, I think we now have the data to show that is working. I mean, there's some published statistics around HSBC's reduction in false positives from working with Google AI Suite, etc. So we're starting to see the data to support, I think, this qualitative narrative. And I think this will continue as we move actually from what historically has been fragmented patchwork of point solutions to a more orchestrated financial crime or compliance ecosystem. This will need to sort of mature in a similar way.
I want to echo your sentiments because I've been in fintech for 10 years and I've seen banks and fintechs learn how to work better as well over time. And do you think, and obviously I'll open this up to the panel as well, but we are seeing a lot of deepfakes and sometimes it's really hard to even see if it's AI, it's not AI. Do you still think it's a real problem to get today or it's more hype than reality?
When I give a 30-second answer, but I'll hand it to my colleagues. But I mean, I think it's a real problem.
Yeah.
I think it's a real problem because the innovation cycles from fraudsters is so high. And actually, financial institutions actually have a structural advantage, which is in the data, but they're not weaponizing this in response to that. And I think it's just a really big problem. We're moving from, verifying identity to verifying authenticity, but nonetheless, it's still a huge problem.
Would you agree about deepfakes?
Yeah, the digital is the only way to the future.
Well, I will not disagree. I mean, the fact is that today people talk a lot, about this deepfake story, but I feel like today we've got as well the identification means in order to kill all these threats that are, these synthetic identities and these deepfakes. So I mean, it's all about understanding, what is available, and clearly is the access, and this is part as well, of the collaboration that should happen between the RegTech, the Fintech, and the banks.
Yeah, I think we have to come together to tackle this, actually. So I want to touch a bit on AI, and Augustus, I'm looking at you. From a banking perspective, how are you guys using AI today to reduce financial crime without adding friction to the onboarding process?
Well, the AI has been the buzzword in the RegTech industry for several years already, so I'm happy that I can share some real practical, real-life examples. It may not be that fancy, but still very effective. So, for instance, let's say a business customer is applying for a product. So in Saldo Bank, we would use a mix of open banking and AI analysis to facilitate the onboarding processes. So firstly, we would ask for customers' permission to access the registry and PSD2 data in order to collect all the necessary information for onboarding, and very importantly, to collect transactional history data, which is then automatically analyzed by AI, and AI not only supports the process by providing some metrics revealing transaction patterns, categorizing counterparties by importance or risk, but AI also conducts public open sources research on the customer identified counterparties and so on. So this, together with the interpretation of registry data, generates a risk assessment draft for the compliance or onboarding officer to review and accept. So we estimate that this saves at least 90 minutes of onboarding specialist work. Also, our onboarding channels are fully digitized and dynamic, meaning that follow-up questions depend on the information acquired in the previous steps. And at this stage, customer may be asked to upload some kind of documents necessary to verify. Those can also get analyzed by the AI and interpretation added to the final risk assessment profile report. So we think that this allows us to minimize customer outreach and avoid unnecessary delays in the onboarding process. So again, this reduces friction. Of course, I have mentioned positives of this AI process, but most certainly there are some challenges, and namely you need to be on top of your AI processes. You need to be able to understand them and explain them to regulator, because very likely, well, most certainly will get such questions from the regulator when they do inspection for you. And also I mentioned that the AI generates a draft report for a human colleague, and human colleagues sometimes have this tendency to be tempted to make some shortcuts and accept generated reports without thoroughly reviewing them, which may lead to grave mistakes. So this calls for a different approach in quality assurance processes in the bank, but still using AI is a net win for the company.
And do you think it's easier for you as a digital bank compared to a traditional?
That's hard to answer. In general terms, I would say yes, it's easier for digital challenger banks to use AI. mainly because the data is already there in a digital format from the beginning, and likely the IT infrastructure has been built having necessary flexibility in mind, and flexibility here is needed very much to integrate external or internal AI agents processes to the core banking system. But I think that traditional banks are very likely to close the gap within a few years,
Yeah.
mainly because of agentic AI.
They're trying hard, even I can see that. So we have a question from the audience, which I would actually like to pose to the panel. So it's from Chris. Thank you, Chris. So how do MLROs get comfortable with the ultimately allowing AI to fully complete the decision processes which are currently undertaken by people? And will they really put their regulatory responsibilities on the line?
This is a good question. And are you able to digitize everything? Very likely, yes. Are you willing to? Yes, absolutely, you are willing to digitize everything. But are you allowed to? Well, likely in regulated business you are not. So my personal opinion is that AI is a tool which helps you to come to the situation where you have enough information, enough structured information to make a decision. And ultimately, the human being takes the decision.
Fair enough.
At least it's how I see it in current regulatory landscape.
Thank you, Chris, and obviously, thank you, Augustus, for that answer. And Bertrand, I'm going to come to you now, because we cannot not talk about regulation, right? So what actually changes for banks once the new AML rules and the European Digital Identity Wallet arrive?
Well, maybe to come back to the topic that was discussed before, I mean, just to summarize the situation in continental Europe. So, based on the acceptance of the regulators of AI automation processes, it has conducted and driven, I would say, member states to adopt various identification means, either fully automated, like I would say in Lithuania and in some other countries, hybrid services such as, what we have right now in France and in Iberia as well, or video-based interviews such as, in Germany or in Austria. All of this, has clearly didn't help a lot, companies to grow their business and to deploy their business across Europe. So what is happening now is that based on the new AML regulation that will happen in July 2027, plus, I would say, this new regulation that will come in force at the end of December 2027 when it deals with the European Digital Identity Wallet, the regulators across, I would say, Europe have decided to raise the bar when it deals with the requirements for the identity verification step. This meaning that they will go and look for substantial or high level of assurance that will be equivalent to a face-to-face on one side, or equivalent to a higher level of assurance, this meaning chip-based identification. I mean, when it deals again with the collaboration between FinTech, RegTech, and I would say the bank of financial institutions, they will not go and clearly enable the connection to 27 European digital identity wallets or to 30 EID schemes that would exist in Europe. I mean, there are more than 150, by the way, across the world that could be used as well, like the UAE Pass, like the Sign Pass, etc. So this collaboration that we foresee on our side, is clearly that we as a RegTech, we are clearly building a network of digital identity that will then enable, I would say, financial institutions to consume this high level of assurance services, identification means, so that at the end, we can clearly, and I insist on this, we can clearly kill these threats that are these deepfakes or the synthetic identities. Because again, when dealing with the digital identity, if you need to go to the city hall to get your digital identity, if you need to get your fingerprint checked, there is a very low chance that then, a deepfake will go through this technique. So this is clearly what is happening right now. So enforcement of regulations, RegTech assisting, I would say, companies in order to ease the access to this dual identification means so that at the end, you can clearly run your business in a safe way.
They say, right, you're your biggest password. So how does this compare with the UK's approach to APP fraud?
Well, I would say, that when looking at the UK, I was reading some articles again. I think that when dealing with the UK, the problem in the UK was the way this digital identity solution was introduced. Why? Because it was not introduced as a way of clearly securing the business online. It was clearly introduced as a way to ban people or clearly to screen what people would be doing. And I think, that it's clearly one of the reasons why we've got this situation nowadays, in the UK, plus the fact that at one time, the government wanted to impose a government-backed digital identity when there was some solution in the private sector as well. But Jay, you might have your idea on this as well.
Well, I mean, we've taken the let's make it expensive route. I mean, the mandatory reimbursement has forced the issue to be addressed through technology. Actually, the value chain to address this APP fraud is just being established, but the approach has been to make the mandatory reimbursement scheme really expensive for financial institutions, whereas the approach in continental Europe is different. I think that's just a fundamental difference. That hasn't yet been reconciled, and we will see, but certainly the budget for solving APP fraud from a technology standpoint has grown significantly from the early stage companies that we see that are facing into those budgets. So.
Well, thank you, guys. I also obviously want to talk about customers and, UX, because, of course, we have to balance all of this, fraud protection with a smooth customer experience as well, because fintechs pride themselves with that at the end of the day. So how do you think we can actually balance the two as firms especially scale across borders? Because fintechs are really maturing.
Well, again, if I listen to what you've said just before, you've said that your customer might still be taking pictures of their document. They might be asked, to check their head from right to left and top to. I mean, it drives to a very bad customer experience in the first place, with some conversion rate that are highly impacted, with this, I would say, solution that have been implemented. The whole idea, when dealing with these new identity schemes that are available, is clearly that the end-user experience will be quite unique, given the fact that by just typing a code on my mobile, I will be able to share my data with whoever is asking for them. Of course, I will give my consent for it. So, I mean, in terms of user experience, this is the best experience that we could propose. And for once, it doesn't impact at all the fraud posture. Because, we will improve the fraud posture, and at the same time, we will improve as well the customer experience, which is usually a balance that you need to go through, whether you want to really work on the user experience side, and degrade, I would say, your user experience, vice versa. So, yeah, I mean, it's really going in the right direction, and it's clearly the missing link that we had, when it deals with trusted services online.
And do you have anything to add, Jay and Augustus?
I mean, in some ways, I think it's a false trade-off. I think UX versus security, it's incremental. It's as good as it has ever been until next year. And then it will be as good as it's ever been. And I think the reality is everyone wants better UX until they lose some money.
Yeah.
Right, this is just the reality.
Fair enough. And then the customer will go back to the trust of the traditionals.
Right.
Do you have anything to add, Augustus?
Well, I couldn't agree more with Mantra. From my professional experience, digital processes and digital identification and customer experience improvements go hand to hand.
Fair enough.
And nowadays, our company uses electronic identification schemes to onboard the customers. However, it also requires us to access some registry data from various countries, and practical problem here is that the content and availability of those public registries are still fractured among different countries within the EU, and hopefully the new regulation will bring some harmonization on that, which in theory should improve the security and the customer experience quite a lot. Perfect. If implemented in a correct manner.
Well, thanks. Okay. So firstly, thank you. And I have another question from the audience, and I think it's really relevant, especially because we have the panel is full of innovators. I'm assuming it's from a traditional institution, because it says, if you could give banks one piece of advice about financial crime, what would it be? And the same question for customers. So one to an institution, one to me, let's say, a customer. Do you want to?
Well, again, I would raise the bar when it deals with the identification in the first place. I mean, to me, it's quite simple. You've got the means today. Okay, they are provided in a siloed mode. Again, as I've said, there are some RegTechs that have done the job for you to ease, I would say, your access to these solutions. I mean, you can go and meet with, I would say, many vendors that will provide you with the latest solutions when it deals with liveness solutions, I would say OCR technologies based on AI for document verification. Guys, I mean, you've got clearly, I would say, solutions that are being made available by government in order to secure your business, stop the financial crime in the first place. So, I mean, just, I would say, get access to them and deploy them into your customer journeys. That would be my recommendation for sure.
Jay, Augustus?
I think they're very different messages. And the message for banks in particular, and stepping slightly away from financial crime, is I think the danger we're in at the moment is getting caught up that the idea that technology is going to be the answer. In fact, technology has rarely been the answer. Good change management processes have generally been the answer. Good go-to-market motions, good education, good brand awareness has generally been the answer to solving this next wave of problems. And in fact, I think to my earlier comments around why the bank fintech partnerships have matured, it hasn't been because the technology has matured. It's been because the understanding of what each party brings to the table has developed. And whether that's the application of DLT or that's the application of generative AI, whatever the underlying technology, actually keeping that in mind as the blocker or the thing to unblock to scale adoption is probably my piece of advice. The advice to consumers is an interesting one. I mean, I'm old enough, my panelists are old enough to remember the days of buying antivirus in a box. And there was something about going and buying antivirus in a box that kept it top of mind. And I think we've forgotten that there is a need to protect ourselves and keep it top of mind in whether it's in payments, whether it's in financial services or security, data security more generally.
I was going to say, from an industry ecosystem point of view, I can definitely say for customers, one of the biggest things we tell our banks or fintechs in general is financial education towards our customers. You still have to simplify for them to understand the products and services they're buying and the importance of, biometrics or keeping a strong password, not using it again. And this is our job as the industry or the companies providing these financial products and services to do that. So we are running out of time, so I do want to end on a positive note and a forward-looking future note. So to all our panelists, if you could summarize, looking ahead, let's say 3 to 5 years, what gives you the most confidence to say we can stay ahead of financial crime? Bertrand, I'll start from you and then I'll come.
Well, to me, today, when you go for payments, you don't ask yourself the question whether AI will have an impact, on this payment network. The reason being is that these networks have been set up by companies like Visa and MasterCard worldwide, and you feel like they are confident network or trusted network. I mean, what we should think about, in the future is clearly, again, I'm looking at it from my angle, that is the digital identity. We should be able to build this network of digital identity across the world so that at the end, companies can access, without any doubt, to this digital identity network, digital identity hubs, so that they understand exactly that by consuming these identities, they are not at risk with the AI threat that could exist.
Yeah, we're all in this together. I agree.
Well, I'll take the liberty on taking a more philosophical approach on this. Very quickly, I strongly believe that financial crime has existed as long as the financial system itself, and unfortunately those two will coexist in the future and we'll have to constantly fight it. But I'm optimistic about that because of digital identity, upcoming regulations which should harmonize the market standards, and having clear market standards and guidelines is always very good when building robust defenses against financial crime.
Jay, you have the last word.
Thank you. And I'll finish maybe on 2 points. I think financial institutions will lose the technology arms race against criminals, but they can never lose the data race. And to the extent that they can unlock that institutional data to fight financial crime, they will win. I think that's point number one. Point number two is they have a unique ability to orchestrate across systems, across data, across modes, again, that criminals don't have. And I think if they bring that to bear on the problem, they will win. So leave it on that.
Thank you. Thank you so much, everyone, and thank you to our stellar panelists for joining us today. Enjoy the rest of the conference, guys.
Thank you.
Thank you.